A stock market dying to know what Powell knows about the economy. Two things keep investors awake at night these days. One is wondering, hop on Twitter and you see it, people the Federal Reserve Chairman for even considering stimulus when 224,000 jobs were just added to payrolls, home sales are bouncing back and stocks sit at. And yet in Congress, if you just took somebody from outer space who had read every economics book and showed them the data of unemployment and consumer confidence, they'd assume the economy is on fire, said Peter Mallouk, president of Creative Planning, a wealth management firm with about $42.5 billion in assets under management. People feel like maybe it's a little rich to question Powell's logic a few months after demanding he act to halt losses. But consistency, it was a week of conflicting emotions. Headlines trump, into that mix comes the quarterly parade of corporate reports, set to begin in earnest next week. And while early in the related video Fed chairman thinks wages could be much higher provided by CBS News. Profits are expected to drop about 3% from last year, making this season the worst of times, according to Bloomberg intelligence analyst Gina Martin-Adams. 8 of 11 early reports from companies with exposure to multiple sectors have been worrisome. Nuts and bolts, they were talking about tariffs and margins, and I think that's going to be a characteristic of the reporting season, said Charlie Smith, founding partner and chief investment officer at Ford Pitt Capital Group in Pittsburgh. Markets are doing their other all-purpose industries are showing weakness, too. Daimler AG, transport stocks, in particular with their reputation for economic are showing weakness, with Citigroup, Deutsche Bank, and Credit Suisse all cutting projections on trucks this week. Broad volume index, even if you don't think any individual quarter moves the needle, you can't feel great about the larger trend in profit estimates, where analysts have been slashing longer-term views for the better part of a year. They now see there are a lot more risks underlying this market than the tape would imply, wrote Tom Essay, a former Merrill Lynch trader who founded the Sevens Report newsletter. If global the common thread is trade. Though phones connecting, a reasonable response to the negativity is who cares? The S&D people are getting defensive at UBS Group AG, according to its head of wealth management, Jason Chandler. Clients are being, of the $28.7 billion yanked from global equity mutual and exchange-traded funds in the week ended July 2, more than $25 billion fled U.S. products, data compiled by investment company Institute show. Those outflows from bulls note it's hard to be pessimistic looking at groups like tech, where Amazon.com's value just hit $1 trillion, while the FANG group comprising it, Facebook, Alphabet and Netflix gained for 23 out of 26 sessions, something it's never done before. And look at the straw, and yet, those are the same bulls betting on a quarter-point reduction in interest rates at the end of this month. Following Powell's, for Peter Cecchini, the global chief market strategist at Cantor Fitzgerald, it's a little confusing. A look at history should be creating considerably more dissonance for market participants than it is right now, he wrote in a note this week. Late cycle cut.
Raindrop, drop top smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park pot.